All right, good afternoon, folks. This is Faris with TwT. Today is Sunday, June 14th, and this is going to mark the fourth video of the YouTube weekend chart prep video series where we're going to go over just opportunity for the upcoming week. So just to be clear, most of the YouTube videos that we put out are educational, but lately we've been kind of steering towards and shifting towards showing you what to look for the upcoming week so that you can make some money with us. Okay, so this is something that we post in the Trade with Text chat room, but this is available for everyone. Right? It's public information. Share it, bounce ideas off of me if you want, whatever you want to do. Goal is to make money together. Okay, so let's get into it. First ticker that we're going to cover, as usual, is the S&P. I think last time around we actually talked about the NASDAQ, but this time we're going to talk about S&P futures. And just a friendly reminder here, when we're discussing this, we're referring to futures, right? /ES. That's how we chart this in the TD Thinkorswim platform. But this also does apply to every chart that you're looking at for the S&P. So whether it's SPY, SPX, whatever, it applies to it. Okay. So this was easily one of the more interesting weeks that we've had in the past month, mainly because we had the Federal Reserve announcement. Okay, don't mix things up and blame it on the macro data, because the markets have not responded to the macro data at all within the past 2 months. This has been entirely just kind of stairs on the way up and then the elevator on the way down with the market. So we just stair-stepped and had, I think for the NASDAQ, it was like 11 out of the last 12 days green. For the S&P, it might be the same case, just glancing at this chart, but a very gradual move. And then we had the drop off on Thursday that was very, very sharp. Okay, just a lot of stops being swept, a lot of panic selling, and really, this is kind of what everybody's been mentioning on social media. Really, a lot of retail traders getting wiped out just in the span of a day because got too cocky on the way up, right? So this week, if anything, was a reminder not to be complacent. But for the S&P, I'll show you what I'm looking at for the upcoming week. Okay, now to be clear, your technical indicators are going to be completely off. And this is actually something that's really important if you are charting on a regular basis. If you understand how moving averages work, right, they're typically taking the average closing price for whatever period you're looking at. So your MACD, various moving average oscillators are all going to be off because we had such a gradual move up and then a flush, right? So when we're discussing just this S&P chart in general, the signals are going to be a little bit different, okay? What I'm mainly looking at are key levels. Okay, key levels, because for trend analysis, again, it's going to be a little bit off. In terms of trend analysis, whenever we have a bullish trend, we want to stay above the 20-day. So this blue line in the background on this super crowded chart, that blue line in the background, that's the 20-day. We failed the reclaim on Friday. So in terms of all the doomsday people on Twitter and whatnot talking about this, that's not the best sign. But going into next week, what you have to be aware of is how the trend is behaving on the daily, so the 1 year, 1 day, and the weekly, which is the 3 year, 1 week. And the two things that I use on those time frames are the 20-day and then the 8 weekly. Okay, if we don't hold the 20-day, it usually results in a bigger move down. If we don't hold the 8 weekly, it results in a much larger move down. So if we switch this over to the weekly, just to show you the trend analysis, and I'll show you why I'm looking at key levels, right? This is the main reasoning. So let me go into my study sets, moving averages. You can see this pink line, pinkish purplish line that's trailing price. That's the 8 weekly, okay? And we did defend that on Friday pretty aggressively, actually. We bounced clean off of it. So next week, in terms of trend analysis, we just want it to stay above 29.78. Okay, that's really all you need to know for the trend analysis, right? You can sum up that whole 2-minute segment into that. And then for key level analysis, it gets a lot more complicated. Okay, so let's kind of stow away 29.78 down here. We'll refer back to it. Okay, again, that's right there. And the key level analysis is very similar, which is awesome. That makes our life so easy, because whenever you're doing some weekend chart prep and you've ran your scans and you're getting ready for the upcoming week, you need to determine what you want from each ticker. What I want from the S&P is just decisive action. In this case, I want to mark the resistance and the support. The support is down here in the 29.70s. The resistance is up here at the 20-day because that's what held us down. Okay, and for what it's worth, you can see my levels are a little bit off. For moving averages, it's usually just good to do that before the open. So notice I haven't updated my moving average on the S&P. It's because that's going to fluctuate a little bit more before the open on Monday. So I want to make sure I pinpoint it before that opening bell. Okay, I'm not going to do it now. So it says 30.47, but really it's 30.45. So that's going to be the nearby resistance. And then the nearby support, we have two big areas that line up with this. One of which is down at 29.71. So let's actually put these key levels in order. 29.71, 29.78. Okay, that's the weekly moving average. And then we have the big support area that everybody and their mother is talking about. And that's in the low 3,000s, specifically around 3,011. Okay, this right here is the support not only from Thursday, but it's also the 200 SMA, which, to be honest, I think the 200 SMA gets a lot more credit than it deserves. It is definitely useful, but if we're looking at a full study set here, you can see that the bottom line is we closed above that Thursday low. So when I'm looking at all of these key levels and trying to just sum up a simple game plan, this is the first support at the 200-day at 3,011. Okay, that's where we found support on Thursday as well. All right, and then this is the next big area. If we cannot hold above this area down here, the markets will immediately drop. It'll be a magnet down to the next level. And the next area is 29.30. That's a very big fib. That's the 61.8% fib. So those of you that are familiar with how Fibonacci retracements work, that's the most important one on this chart by far. Okay, so this would be the next big area. And for what it's worth, just gonna mention this as a little tidbit here. We're going over the S&P so much because it had a very eventful week. When you're prioritizing your watch list over the weekend, you want to focus on something that actually had a range extension or something that had an eventful week, because that's likely to give you more opportunity in the upcoming week. Okay, so this would be the downside risk. And really, I don't even think that's going to be a reversal point. I think if we give out, we're probably just going to drop to the high 2800s very easily. But that is technically a big key level. Okay, and then in terms of the reward here, you can see that 8 EMA on the daily trailing. So it's at about 3,100 roughly. So this right here is the congested area of key levels. Okay, this right here. And then this would be the upside. I'll just put it in green real quick. Upside, and then downside would be this target, but in reality, we'd be signaling a much larger move. Okay, so these are your key levels for the S&P. I wouldn't so much focus on the downside risk or the upside risk. What I would mainly focus on are these key levels down here, right? These that we talked about. So 29.71, 29.78, and 30.11. That's 3 key levels to watch. It's not that overwhelming. Okay, and technically, we closed above it on Friday. All right. Now, the last thing I'll say for the S&P, for all the doomsday bears out there, because as you guys know, I just follow price, right? Price and volume. That's it. So for those of you that are saying this is the next big sell-off, I think there is definitely some potential there. I would honestly love that, because we made a killing on the first sell-off in the Trade with Text chat. We were getting those limit downs. There was just massive ranges. Even on Friday, I reeled in almost a full weekly quota just by trading the NASDAQ and the S&P. And that's because there was so much range. So I would love for that to happen. The only thing I'll say outside of those few support levels that we talked about to look for this week is volume. And if you look at the volume pattern of the most recent sell-offs and just sell-offs in general, we get this, right? And I'll actually maximize that so you can see it better. We get this, right? Consistently increasing red volume bars. That means that the closing price is lower than the open, right? Really, the closing price is lower than the previous close. That's why these bars are red down here, okay? So what this is telling me is that we had a very large volume bar on Thursday, right? You can see that guy there. And then that was followed by pretty much a consolidation day. Consolidation days are indecisive. They don't give us a lot to work with. What we want next week is either volume to drop off and price to go up. So I'll write these out. Volume drop off. Oh, sorry. volume drop off and price to go up, or we want volume to go up and price to drop off. These would be the best two scenarios, and honestly are the very likely scenarios. And I know technically you can just say, well, aren't these opposites, Faris? But this one creates a landslide. Okay, this one creates a very gradual comeback. All right, this would be the better scenario for opportunity. This is something that we have to consider just based off the volume. Okay, so for volume patterns, that's what you're looking for. All right, now to get into individual plays, and I'm not gonna lie to you guys, I usually spend about an hour prepping up for the upcoming week. It doesn't take me very long because I have a system of running the scans, and I run my scans after the bell on a Friday. Today, it took me a solid hour 45, 2 hours. And the main reason is that a lot of these charts look like crap, right? They just don't look good. And that's not saying they look bearish, right? We're talking about opportunity. So they don't look like they will yield a lot of opportunity. So what I did when I saw that, because most of these tickers are just pulling back to moving averages, not giving us decisive movement because of that sideways Friday. Basically what that tells us is that we need to focus on stocks with range until we get more decisive action. So I narrowed it down to 3 large caps and 1 smaller stock. So Boeing, Tesla, and Goldman. Okay, and I'm actually going to write out the game plans beforehand, just so that you guys have an idea of what I'm looking for going into the upcoming week. So Boeing, the reason I'm watching this one, it's got gaps galore on this chart, which means that the moves are going to be aggressive, right? And these gaps, when they actually start filling, they just magnet up to the next resistance, right? It's almost guaranteed to hit that day. Okay, so gaps galore, and airlines were pretty hot last week, even though they dropped a lot. Like, for example, American Airlines, I bought puts when it put in this candle, right? I bought puts, and then I sold them into this drop last week, but we played the bounce on Thursday and Friday. Right? It was actually pretty profitable because there were positive hairlines. Oh my God, completely different thing. Headlines that drove them higher. So with airlines getting those positive headlines, that popped them back up to resistance. And even though I hate most of these airlines, Boeing gets a little bit of sympathy love off of them. So if there is a negative or positive headline for these airline stocks, Boeing is going to kind of reap the benefits and get that volatility that we're looking for. Okay. Tesla, plenty of downgrades recently, and it gave back the previous all-time high. Okay, which the NASDAQ did, to be fair, right? If you look at the NASDAQ, 97.63 was the previous all-time high, and we lost that. So that's going to be the key reclaim. Okay. And if you look at Tesla, which we'll look at more in a second, 968.99, so pretty much 969 was the previous all-time high, and it gave that back after getting a couple of downgrades, one of which was significant, the other was not. Okay. And then lastly, Goldman, a bunch of banks, and we've been talking about banks for a while, and I hope you guys have actually followed, because there has been some very big money to be made on these financial stocks. Okay, very big money. Like we were talking about Wells Fargo off the lows, it went up 30% in 1 week. Okay, so Goldman is not necessarily in that position, but most banks look like this, where they ran up just a little bit too aggressively recently, or it was on this push, one or the other. And then they got too overextended, and they're, financial stocks. They're not going to keep running and running and running. They usually revert back to what they were doing before. So now they've all reverted back down to their 20 days, the 20-day SMA or EMA, whichever you prefer. So Wells Fargo, Bank of America, Goldman, all of them have virtually identical charts. So really this is a easy make or break for Goldman off of that moving average. So let's take them one at a time. Okay, I just wanted to mention that individually, this is why I'm looking at them. Gaps, airlines, downgrades, gave back the all-time high, and then this one reset to the moving average. So basically, all of these are at a make or break, right? So if we look at Boeing, let's go over this chart real quick. Nice and easy. Boeing had a really hard pull off this high. Mind you, I will say, I don't usually brag. we nailed the low on this. We bought Boeing right here off that 116 historical support. And I'm not saying this to brag. I'm telling you that if Boeing pulls back to 116 again, that's a good dip buy zone. Unless the markets are just plummeting, right? But if it pulls back to 116, that was a great dip buy zone. We actually got in on the 114s, and the stock doubled from there. So this was a very big move. So Boeing naturally had to come back down to earth, might even still keep doing that. But we have a nice little box formed here for next week. Okay, so the key break here for Boeing is nice and simple. Again, gaps galore. 192.18 is the big resistance. So if the markets start bouncing back, Boeing is just under that resistance, and we have an immediate upside target of 204.36, which, again, those of you who trade options are probably watering at the mouth right now. That is a juicy, juicy gap. That's a lot of immediate upside. So that being said, for Boeing, if we get the markets moving up a little bit, that will be the move that we're looking for. Okay, so that's just the gap fill area, so that Thursday high to the key fib. Okay, if not, if Boeing fades this move, the big support is down at 175, which again, very distant. That's 14 points off the current price. Okay, so for Boeing, I'm not saying that I'm a diehard long here. I'm just saying look for range. Okay, we know the make or break price for the upside target. And then this would be the support down low if we just fade this move from Friday. Okay. Now, Tesla, as I mentioned, gave back the previous all-time high on 2 downgrades. I really think Tesla is a stock that we kind of have to take with a grain of salt here, because it's really easy. This is probably the easiest large cap out there to get incredibly biased on, because you either look at their financials and realize that the company does not make that much money, and you want to short it all the time, or you realize that it trades like a penny stock and you try to jump in on those short squeezes. Also, for everybody and their mother who told me I was stupid for calling a new all-time high on Tesla right here, you can proceed to suck it, because that was a beautiful breakout, followed through. And notice when this thing quiets down, those moving averages tighten up, right? They get tight. It's the same type of concept as a Bollinger Band squeeze. Or a Keltner channel squeeze. When those bands get tight, we're going to explode one way or the other. Okay, Tesla, in this case, the markets were moving up, so it was more likely that it would be to the upside. And you could see just how fast that move was. 3 days. That's how long it took to put in the new all-time high. Okay, but the interesting part about this is that it gave back that resistance at 969. Okay, so you don't have to suck it. You can actually trade it now to the downside if it continues to set up. 969 is the resistance overhead. If it breaks out, we got blue skies. Simple as that. The first target would actually be the high right there at 1027. Okay, if we get the pullback, this is a chart that has an immediate magnet from the 8 to the 20 SMA. This would be EMA to SMA. That's how I use it. So basically what we're looking at going into next week, we have 2 range defining levels here. Barely held the 8 EMA. Okay, if it holds that, we'll pop easily up to the resistance and potentially even break it. If it does not, cliff dive to the 20-day. Okay, technically it did defend that level, so automatically our bias would be on the long side, but let's see how it reacts on Monday. Okay, so 2 areas that you're looking at on Tesla are 969 and the 8 EMA. If that cracks, go to the 20. If this breaks, we go to 1027. All right. And then the second to last ticker here, because I do want to talk about one smaller stock to kind of wrap things up. Goldman Sachs reset to that 20-day. It also had an inside day following this huge volume down day. No matter what the stock chart is, you can even just kind of cover up the ticker to be unbiased here. No matter what stock chart this is, that's going to result in either an inside down or an inside up, which is going to have a lot of opportunity. So it's a simple candlestick formation, right? We either break the high or crack the low. If we were to break the high in this scenario, we pop up straight to 206.9. And in reality, the best part about this chart is not even the magnet up to 206.90. It would be the upside after that if the markets were to continue to rally. So we have a game plan on the long side. On the short side, it's pretty simple. It's just for a crack of 196.21. And all we're really doing is annotating the high and the low from Friday and watching for a break of either one of those, right? That's how the inside up, inside down formation works. And if we were to crack that low, it would be a drop down to the Thursday low. That would be the first target. Okay, so for the time being on Goldman, simple game plan, 206.90, 196.21 are the areas to watch here. Okay, and then last but not least, penny stocks ran wild this past week, and this is just going to be a brief mention here. I ran a ton of scans, probably looked at close to 200 penny stocks, did not like more than one or two of the charts, and even those one or two had the risk of an offering. So I'm not saying that, penny stocks are going to be horrible into the next week. Actually, I think the opposite. I think the low float runners from this past week are putting more eyes on pennies, which will drive momentum. But just, looking back at some of the ones that ran last week, you can see most of them are back in the dumps, right? So after running all those scans and seeing the limited opportunity, I really am not that crazy about any specific one. I'm going to wait for the Monday pre-market session to actually run scans again and then see which ones are moving and which ones could come into play, because I don't like too many of them from the weekend scans. Okay. And notice, guys, I'm not trying to spoon feed you a stock to buy or pump anything. I'm looking at what's going to make me money, what I think will give opportunity. And notice if I don't see a penny stock that I don't like, I don't still mention one, right? I'm trying to find opportunity, not force myself to trade. And that's the kind of discipline you want to be building up on a regular basis. Okay. The last ticker I will mention, though, is Lake. Loved the earnings this past week. And it's also a COVID play, right? It's a coronavirus play. So just by that logic, with the markets getting a little bit more volatile, if they were to drop again, right? If they were to drop hard, maybe even 5 to 10%, coronavirus plays are going to get a big pop up, and Lake actually has a catalyst, right? They crushed the EPS estimate, they crushed the revenue estimate, and the stock soared. Okay, we traded it after hours for $2 per share, and we traded it intraday for $2 per share the following day right here. Okay, and it's pretty simple for Lake. The game plan is either a make or break of the 38.2% daily fib. So you just draw the daily fibs like this. 970 to 28. Okay, you can pause the video and draw them yourself if you need to right there. But it's either for a break of 21 or a crack of 1885. And if it does crack 1885, that's signaling a gap fill. I won't be playing the short though, just because those earnings scared the hell out of me on the short side. I would much rather play the long. Okay, but $21 is the key break for another run up. That gives us immediate upside to 22.30 and 23. Okay, so that would be my coronavirus stock to watch for the upcoming week if they start making some money. Okay, if they start moving up. But overall, very volatile week in the markets, a lot of ups and downs. The main catalyst for the market drop was the language from Powell, right? The actual Fed speak on Wednesday. So even though they're not intending to hike rates for the next 2 years, we'll see if that actually stays true. The markets did not like the language from that press conference. So we'll see what that brings for the upcoming week. I'm thinking that we'll probably just slowly recover. I hate that. I really hope that's not the case. I would much rather prefer a big drop. So knock on wood, let's see if we get that. Okay. Also, I hope there wasn't any background noise. I'm visiting my baby nephew this week, which has been a blast. But if there was too much background noise, you can just lower the volume, focus on the charts. All right. But either way, thanks for another one of these YouTube videos. Hope you guys liked it. And if you have any other tickers to watch for the upcoming week, feel free to comment them below. All right. And don't forget to like and subscribe. All right. Have a good weekend, folks. Good luck on Monday.